I'm John Hanna for CityTV.net in New York, and we have Dirk Dijk, Chief Equity Strategist at Saks.com, joining us from Dayton, Ohio. Hey, Dirk. Good afternoon.
Hey, how's it going?
Good. And yourself?
Oh, not too bad here. So, we got the employment report on Friday, and it was a pretty solid report. Overall, we added 216,000 new jobs in the month of March. All of those, and then some, were from the private sector. While we added 230,000 private sector jobs and actually lost 14,000 in the government, primarily at the local level. State level was unchanged, and federal level was up 1,000, which is kind of a rounding error. And we also had upward adjustments to the February and January numbers. Not huge, just 7,000 in total, but a much bigger upward adjustment in the on the private sector side, and some big downward adjustments on the government side. On the government side, this is total. Instead of losing 30,000 in February, we lost 46,000. And in January, instead of losing 5,000, we lost 26,000. So anybody who says, public sector employees should get paid less because they've got so much more job security, hello, that's where we are losing massive numbers of workers, mostly due to the budget cuts that are going through. Now, these jobs would have been lost a year ago or 2 years ago had it not been for the help that the stimulus spending was giving to the states back then. But that's now drying up, and as a result, we're seeing all these cops and firefighters and teachers being laid off. Those are real jobs. I mean, those people, spend money at Walmart just like anybody else does, and they're providing real services to us. Now, it's true that we have to support those jobs via taxes. And so, generally people want to see more growth on the private side than on the government side. But, this is not a good sign when you're laying off so many teachers and firefighters. Some of the other internals in it were kind of mixed. While we did see the unemployment rate tick down to 8.8% from 8.9%. That's not particularly dramatic, but it is the fourth month in a row of declines, and it was happening for the right reason. The civilian participation rate has now bottomed out. It stayed at 64.2% for 3 months in a row, but we've had an actual tick up in the employment to population rate to 58.5% from 58.4%. It's not a big increase, and it's still a very, very low level. But at least we're moving in the right direction. Across demographic groups, we it's sort of mixed, but mostly better. Both men and women saw a drop in the unemployment rate. Men to 8.6% from 8.7%. And that's relative to 10% a year ago. Women have a much lower unemployment rate at 7.7%, but much less percent. But it's much less of an improvement. A year ago, it was at 8%. So for women, the situation is sort of flat. Men, it's improving, but it's still quite bad. teenagers took a hit in terms of their unemployment rate. It's up to 24.5%, 23.9%, although when you really look at it, it wasn't that bad, because that was mostly an increase in the participation rate. More teens say that they want jobs, and actually the proportion of teens with jobs actually increased to 25.8% from 25.5%. So even though the headline number of it's a big increase in the unemployment rate, it was mostly from more teens working. But almost 1 out of 4 teens who want jobs can't find them is a really horrendous figure. That's kind of you hear the talk about youth unemployment as being this trigger for big social unrest in say North Africa. Is the U.S. really in a position to be pointing fingers? And even at the next group up, the 20 to 24-year-olds, you're still looking at a 16.4% unemployment rate. And for the 25 to 34-year-old group, you're still looking at a 9.3% unemployment rate. Now, for the early 20s, that rate was unchanged from last month, but down from 18.2% a year ago. And for the late 20s, early 30s crowd, it was down to 9.3 from 9.5 in February, but 11.1% a year ago. But that, if you think about it, if we're going to solve the housing problem, which, again, I keep on harping on as being the key reason why this economy still feels so sluggish, 2.5 years, after we had the financial implosion, it really, really comes back to the housing issue. And that 20 to 24% year group, that's kind of the age when you're just getting out of college, or if you didn't go to college, you've gotten your associate's degree, and you're sort of getting your first job and getting your first apartment. The later group, that 25 to 34-year-olds, that's the first year, the prime age for people to be buying their first house. Right? And so if you got high unemployment in those groups, you're not going to have people have the confidence to say, yeah, I'm going to get out of mom's basement and buy my own house. Oh, I'm going to move out of this apartment, and I think I feel confident enough in my employment prospects to actually buy my first house. Why are you going to do that when it's almost 10% unemployment? You're going to be a little nervous about taking on that sort of long-term commitment. And as a result, you don't see the sort of household formation that is needed to absorb this huge overhang that we have of housing inventory. A couple of the other demographic groups, whites saw a tick down in their unemployment rate to 7.9% from 8.0%, but blacks saw it increase by 0.2 to 15.5% from 15.3%. In both cases, nice improvements from a year ago. It was 8.7% a year ago for whites and 16.5% for blacks. Hispanics saw a drop to 11.3% from 11.6% and 12.5% a year ago. It's, again, some progress being made in the sort of the lower, the more disadvantaged parts of the economy. You can also see that in when you look at it by degrees of educational attainment. High school dropouts actually saw the unemployment rate drop to 13.7% from 13.9%, And that was actually in the face of a increase in the participation rate to 46.1% from 45.5%. So we're getting a bunch of low-end jobs starting to percolate up through the economy. I'm not sure if everybody saw the announcement that McDonald's on one day is going to try and hire 50,000 people. That's going to be a lot of dropouts in high school graduates, not people with advanced degrees. High school graduates, the unemployment rate stayed stable at 9.5% relative to a month ago, and down from 10.8% a year ago. Those with some college or an associate's degree, the unemployment rate fell to 7.4% from 7.8% last month and 8.2% a year ago. We saw a little increase in the unemployment rate for college grads to 4.4% from 4.3%, but that's a heck of a lot better situation, with 4.4% unemployment than for dropouts, 13.7%. So, what your mom told you about staying in school is still really good advice. A little bit of disconcerting news on the duration of unemployment front, which is, again, a very troublesome thing in this recovery. Half of all the people have now been out of work for 21.7 weeks. That's up from 21.2 weeks last month and 20.3 weeks a year ago. So once you lose your job, you're really out of luck, right? But fewer people are becoming unemployed. But once you're unemployed, you are really in a tough spot. The average duration is now up to a record 39.0 weeks, but it's a little bit, it's not quite as bad as it sounds. It's up from 31.7 weeks a year ago, but they sort of changed the definition of how they calculated it. It used to be if you're out of work for more than 2 years, they discounted that as 2 years. Now it's up to 5 years. So they've greatly changed the definition. So the year-over-year increase is not what it appears to be, but it's still a really, really horrendous situation. But, net, I have to say that this was a very positive report. We're moving in the right direction, but we've still got a very, very long road ahead of us. I'm concerned about the drag from government employment slowing down this recovery and the pace of job creation. Private sector does seem to be getting itself into gear. This is the second month in a row of very nice private sector job gains. So, we're heading in the right direction. But, this is not the time for the government to totally relax and forget about the unemployment problem. 8.8% unemployment is, or should be by anybody's definition, an absolute disaster. And, the government ought to be doing something about it. Unfortunately, the government, the whole discussion is going directly the opposite direction. It's not about how to decrease unemployment or increase the number of jobs. It's about what we can cut. And, it's positively Orwellian to say that you're going to, decrease unemployment by cutting jobs. But that is exactly the message that Washington is sending. How much can we cut? And it's all coming out, all the cuts are coming out of the parts of the budget that do the most to stimulate employment. We don't stimulate employment very much, by our fighting in Afghanistan or Libya, right? We stimulate that by things like infrastructure projects here in this country, or through transfer payments to people who don't have a lot of money to allow them to go out and spend spend money, and actually keep the people at Walmart employed and actually consuming some stuff. So, while I do think that we've got some traction on the jobs front here, it is in the face of some very serious headwinds coming out of the government at both the federal and especially at the state and local levels. And that's going to just make it that much longer until we get back to the point where we had the same number of jobs as before the recession started. And at the pace that we're on, it's going to take us almost another 3 years to get back to the total number of jobs that we had at the end of 2007. In the meantime, you've got the population growing, and that's not a very welcome prospect. And we ought to be trying to accelerate job creation, not trying to slow it down out of misplaced fears that the economy is going to overheat and generate all sorts of nasty inflation. The job that is not done today doesn't necessarily get made up next year. It just is lost output, lost for good, and is a tremendous waste of resources. And it's not like the government is going to be crowding out private activity in here. What you'll be crowding out is idleness. And there's an awful lot of idleness in this economy. But, we're making progress, but a long, long way to go.
That's Dirk Dijk, Chief Equity Strategist at Zacks.com, joining us from Dayton, Ohio, and I'm John Hanna for CDTV.net in New York.